Hello investors, traders, and MarketClub members everywhere. Adam Hewison here, co-founder of MarketClub, reporting from a very frozen mid-Atlantic state of Maryland. Now here's the market updates for Thursday, the 23rd of January. Just like the weather, markets do change, and right now we're seeing some big changes in these markets. So let's start off with a ETF. It's GLD, which tracks gold. This is what I want to bring to your attention today, and that is a couple of things that I think are very important. First of all, we talked about this before in one of our previous reports. This is a double bottom right here in the gold, but more importantly, you've got this trend line that actually starts in December. Okay, that's December of 2012. Okay, so you've got a 13-month trend line here, 13-month trend line. It was just broken on the upside today. The other positive for this market is the fact that you're over the 50 line in the RSI indicator right here, indicating that the trend has moved up, plus the MACD. The only thing that's missing right now is our trade triangle. What I'm suggesting to do is actually buy half of your position, add the other half when the green monthly trade triangle kicks in. But we do have weeklies and we do have dailies. So let me clear the screen for a second. There's our weekly that kicked in at 120.43. The market's at 121.70 right now. And it looks as though it's making a little sort of mini head and shoulders to go higher. But the most important thing, the most important element in my mind is the fact this long-term, this 12-month trend line has been broken on the upside. The momentum has changed in gold. And just like gold is going higher, the indices are going lower. Something to pay close attention to. So let's go to our next market. Next market is the Dow. Now the Dow is the one that was the leader here, but it just gave a weekly signal to exit the market at 16,240. There's the signal on the 23rd of January. You can see that. Now if we scope this in closer, and I'll just go to a 6-month chart, and I'll show you a trend line that you can draw. I was going to do a candlestick chart and pull up our trend line tool. Just click here. You can see a little yellow box there that tells you the trend line tool is live. Draw this up here, and bingo, there, close. There's the break of this trend line from last October. Plus, you've just plunged below the 50 line on the RSI indicator. That is not a good sign. And every time you've done that, like here, you had a pretty significant fall. Here, not so much, but this is a little bit different. You also have a negative divergence in the RSI. We've been seeing prices, if you look at prices, you can see that this has been going down while the prices have been going higher. That's not a good sign again. But below the 50 line is another negative. The breakout below this trend line here, this what is now 1, 2, 3, almost a 4-month trend line, is not a good sign. And I think we'll see a pullback more than we expect. Remember, they slide faster than they glide. We just need some more negative news that comes out. And I'm not wishing for negative news, believe me, but news, even good news, can be negative in some instances. So let's clear the screen. Looking at the S&P 500, a little bit different picture there, but nonetheless, the one thing that stands out to me on this particular indices is pretty much the same thing as the Dow, and that is the negative divergence. You see the prices going higher here, but you're losing momentum. If this closes below 50, it would not be a good sign for the S&P 500. Again, it's in a trading range with a 55 reading. Let's see how that plays out. This is the Nasdaq. Nasdaq's a little bit different. Well, it has been different because of obviously the strength in some of the stocks there, like Netflix, for example, today, and also Apple the last couple of days. So I think the Nasdaq is not going to be really going alone. It's going to follow with the S&P 500 and the Dow. Again, you've got the negative divergences on the RSI, which I can show you very clearly here. This is going down. You can see that. You don't have to be a rocket scientist to figure this out. And there's the up there, meaning it's losing strength. And I think watch this very carefully. But obviously the Dow and the S&P 500 are the ones that are going to have a bigger fall, in my opinion. This is going to be helped enormously by the tech stocks. Looking at the Euro's had a big move up today. We saw a little pullback there, but generally speaking, it's still a little bit negative in our mind. It hasn't really turned up yet in really knocking the dollar down. But again, the weekly and the daily is what we follow, so you should be out of the short position we had in this market. If I put the weekly, you can see kicked in right there at 136.25. It's 135.99. And our dailies, if I put those in, you can see it clicked in today to cover that position at 135.77. So again, you trade basically on the weeklies for trend and the dailies for timing. That's how we do it. Lastly, let's take a look at crude oil. And crude oil, again, that's made a new high. Wicked cold here in the east, all the states, and we're expecting cold weather now for the next probably week or 10 days. Very unusual. We haven't seen this for 3 or 4 years, and it's really causing quite a bit of havoc. So here we have our weekly is down, so we're waiting for that to turn up. The daily's turned up. It's a 55 range, trading range, but you're also seeing very close to the resistance line on the RSI. We're back up to that 50 line. Remember, this is a very important line that when it gets crossed, you can see right like here, the markets do drop dramatically. So this should now be resistance for this particular market. So let's see how that plays out. But this is Adam Hewison reporting from a very, very cold Maryland, and I would invite you all to join us in our Q&A session on our blog. We have lots of very powerful questions, easy questions, and some difficult questions we do our very, very best to answer. So join us there every day and post a question or answer a question. I'm Adam Hewison. Stay warm and have a great trading day.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.